Thanks a lot for joining us today for this special seminar that we are doing on a new small case launch of IIFL COVID-19 Resilient Portfolio. Now we all know the kind of challenges that COVID-19 has brought upon ourselves as well as the market. We clearly believe that there is going to be a tectonic shift in terms of leadership of the market because of what has happened over the last 2 months. And as a result of that, giving investors an opportunity to buy a portfolio which is likely to do better even if COVID-19 challenges remain for a longer period of time. We have come with this new particular uh, small case. Now, let me just share with you, how do you go about buying this particular small case? You can go to our website, smallcase.indiainfoline.com. On that particular website, you could see a lot of our different small cases like aggressive small case, moderate, conservative. And right at the top of it, you have this our new small case, which is IIFL small case, which is COVID resistance. Now, let me just tell you, what was the thought process that we were going behind when we came up with this particular small case. The first logic that we had in our mind was that the business should do very well if this particular current scenario continues for a period of, say, more than 3 months from now. If that happens, then which are the kind of companies which should do well? So let us go through some of those factors that we went through while making this particular small case. The first factor that we were looking for is balance sheet strength. Is the company debt free? Is the company not leveraged? If you look at that particular perspective, we have chosen two companies because of that. I'm going to come with details of the company later on as well. But just to give you a mindset about what was the thought process of coming up with this particular small case. The first company is ACC and the second company is Westcott. Now both these companies are under leveraged companies. These are debt free companies. So even if they might have some short term impact, like in case of ACC, you might have lower demand right now, though we have seen that some of the cement plants have already started. Construction activity has come down a bit, but because the cash is there in the balance sheet, because the valuation perspective on an EV to EBITDA basis, it is EV per ton basis, it is trading at less than $70. For that particular reason, ACC looks very attractive to us. The second stock that we talked about because of balance sheet strength is Westcott. Now, why do we like Westcott? First of all, this particular company stock price has come down by more than 60%. The company's largest shareholder is Mr. Prem Vatsa of Fairfax Spain. In fact, just a disclosure, IIFL also, Mr. Prem Vatsa is a very large shareholder in that. Now, in case of its core business, which is temporary staffing, we clearly believe that going forward, demand is going to boom. Yes, there could be some challenges where some labor relocation might happen, but over a period of time, people will look at outsourcing most of their permanent employees in that particular category. And from that perspective, we think so that Westcott is going to do pretty well. Now, another interesting thing which has happened because of this, COVID-19 epidemic is that the commodity prices have really cracked big time. In fact, crude price has gone down significantly by more than 60%. Now, if the price of crude has come down, so then what are the kind of companies that should really do well? The first company that we like out of that is Kansai Nerolac. Why do we like Kansai Nerolac? First of all, in the paint segment, they have really done pretty well on the tier 3, tier 4 cities. Secondly, they have been expanding their distribution network. And as we believe that once the lockdown gets over, auto demand, particularly for two-wheelers and cars, especially the entry vehicle cars, will come up. Since they are focused a lot on the automobile segment, I think so Kansa and Nerolac can really do wonders going forward. In fact, if you look at the valuations, the stock is trading at just a multiple of 36 times, whereas most of the companies in this particular segment are trading at a multiple of more than 40 times. The next company we like is Bouchard Gas. Now, why do we like Bouchard Gas? They serve the Morbi market where now no other player is there in terms of giving fuel. Morbi is a pocket where you get most of the sanitary ware, ceramic manufacturers. So we have seen that the volume growth from Morbi has doubled for Gujarat Gas. And as a demand for gas is not going to come down because of COVID in a major way, as we see industries coming back. From that perspective, we really like Gujarat Gas. The third company that we like is Pidilite Industries. Pidilite Industries, as you all know, is a market leader. It has a balance sheet which is quite under leveraged. Now, in the current scenario that we are seeing, that overall economy is not doing well, we clearly see players like Pidilite gaining market share over unorganized players. And for that reason, I feel that Pidilite is going to do pretty well going forward. Now, coming to this market leadership mindset, even other companies, in fact, HUL is another company that we really like because we believe that they are going to gain market share really well going forward. Even on the private banking space, whether it is a HDFC Bank, whether it is a Kotak Bank, or whether it is ICICI Bank. In fact, ICICI Bank numbers which came on over the weekend were pretty amazing. So we believe that considering the challenges which are there right now in the industry, all these three companies are going to do pretty well going forward from the banking side. Now, there are a host of stocks which have come down and they have gone on a very, they're quite unjustified in terms of their levels. So something like a Westcott, right, which we have talked about earlier as well, which was a debt-free company. Hindalco, again a company where stock prices come down and we clearly see an improvement going forward in terms of volume. Power Grid, another stock which is a very high dividend yield stock. IOC, another stock which is available just a PE of 5.5 times. It's the largest oil company in India. Kaveri Seeds, PE of just 6.5. Dividend plus buyback yield of 10%. So free cash flow yield of around 10% in the stock. A lot of these companies have gone to a very attractive level. In fact, in case of Kaveri Seed, we see hardly any impact in terms of demand because the Rabi crop which was there, that is one of the shortest season and we don't see any impact in demand for seeds of Kaveri Seed because of COVID. In fact, we believe that some of the structural stories where the awareness level is increasing, penetration is increasing, clearly SBI Life, which is outperforming because of its digital footprint over LIC and still has that mindset of, people have that mindset that we are parking money with the PSU. So taking advantage of that, SBI Life is doing pretty well. Deepak Nitrite also, which has been one of our favorite stock, it has already doubled. I think that company will continue to do well because most of its segment, whether it's the color segment, agriculture, most of their segments going forward, demand will be pretty robust for them. And another stock that we really like is Hero Motocorp. Now, why do we like Hero Motocorp? The reason for that is that we believe after COVID, people will not share vehicles that much. The people who were doing Uber share and, Ola share, the era of that has gone at least for some couple of quarters. And for that reason, we believe that people are going to for sure buy bikes. In fact, over the weekend, we had Hero Motocorp talking about a significant increase in sales happening after the shutdown. So we clearly see that company doing pretty well going forward. Obviously, you can never make a COVID portfolio without having any defensive stock. And from that, you have to go to the pharmaceutical sector. Within that, I think so IIFL Lab, which will grow at 20% CAGR. Stock is already up 50% this year. I think so that's a wonderful stock to own. It's not only about some of the key drugs that is being used right now in the treatment of COVID, but also the backward integration that the company has. For that particular reason, we clearly believe that IIFL Lab is going to do pretty well. From consumption perspective, as we already discussed, HUL and Pidilite are there. And obviously, Power Grid is another stock which is more of a defensive. Now, what is the kind of weights that we have given to these stocks? So broadly, we have given similar weights to most of these stocks, and we believe that if you look at having a very diversified kind of a portfolio like this, which we have given, it will be something which will be quite rewarding. In terms of a market cap distribution, the portfolio is 54% in large cap, 33% in mid cap, and 13% in small cap. If you see from a segment perspective, unlike the index, where more than 35% weight is still with BFSI sector, our portfolio is spread across different market segments, despite having some of these stocks. So we believe that this particular portfolio can really do well going forward. And for that particular reason, I think so just putting in a minimum small case amount of 37,274, you can go and buy this particular small case. With that, let me just take some of the questions which have come during the chat from people. Let me just see if I can easily go through those. Just give me a moment. Can't see just for 1 second. Let me just see if I am able to see those questions. Yes, I can see now. So Rakesh Mansukhani has asked me, can you give me advice on mutual fund? Rakesh, we can obviously give you, but right now we are talking about this COVID-19 resistance fund that IIFL has launched. It's a stock investment fund. So obviously, right now we would answer those questions. Having said that, I think so doing an SIP in a multi-cap mutual fund or a large cap mutual fund will be good for you. Thanks a lot, Rakesh. So someone has asked which penny stocks can we invest at this particular point of time? So I would suggest to you, you should not look at investing only in penny stocks, because penny stocks are quite risky, and sometimes what happens is that when you buy those, there's a lot of risk that you have taken. Galaxy JB has asked a very good question. Why have you not included IT? So I'll tell you, the problem main is that we feel that on globally, the BFSI companies are going to cut down on their expenditure on IT in a big way. Before cutting salaries of their employees, they will look at cutting the cost of vendors. And for that reason, we believe that overall pricing pressure will be there in the IT sector. And for that reason, Galaxy, we have not taken IT stocks in this right now. So someone has asked me an advice on some particular stocks like Vedanta and JSW. I think so we'll take it in some of the other sessions that we're doing, because today we want to focus only on COVID resistance portfolio. Next question we have is how long do you think we should stay invested in this? So in this particular small case, you can remain invested for a minimum period of 1 year. Whenever we find there is a reason for you to shift stocks, we will for sure look at that, and you will get an automatic alert of the same via mailer. So you can go to our website and just go and using your IIFL account, go and buy this particular small case. What is the expense ratio? So as such, there is no expense ratio except for the brokerage charge that you pay, and the fees that we charge is, I think so, 100 rupees per small case. Other than that, there is no brokerage charge, any other expense that you bear except for the statutory expenses. This is more like buying stocks in your portfolio, not exactly like a mutual fund. Next question is, can I do an SIP in this portfolio? Absolutely, you can do an SIP in this particular portfolio. Someone has asked me a view on ICICI Bank for short term. Obviously, the results were good, but right now we would not talk too much about specific stocks. We'll talk more about the small case. So in tobacco industry, what's going to happen is that the government is clearly looking at increasing taxation, and they just last week came out with a circular of increasing the photograph which is put in the pack. If there's a bigger impact on the smaller players, then ITC might in fact do well. But right now, jury is still out. What would happen in this? Someone is asking about PNC infra. So right now we would not like we'll take all these queries when we do a separate uh, webinar for specific stocks. Today we just want to focus on the stocks which we have put in this COVID small case. What about Quest? How they pay salaries? So I think so. In case of Quest, we clearly see a shift happening to temporary staffing, and for that reason, we believe, considering that the company is quite decent in terms of liquidity right now. They are a company which has hardly any debt. We think so this company should do pretty well going forward. Yes, growth might be a challenge in short term, but we believe next year is going to be pretty robust in terms of growth. So we really like the overall growth story that Quest is going to experience. Hiring people is going to become pretty challenging, and I think so for that reason, Quest will get premium pricing from its customer for that segment of people. As you know, a lot of migrants are going back to small towns, and for that reason, we believe Quest over a period of time can really, use their organization system in terms of ability of sourcing people to really go and do pretty well going forward. Are we buying multiple stocks in this small case? Can you let me know the brokerage and other charges when I buy small case? So Kiran, yes, you are buying multiple stocks in this small case. The charges, I believe, are 100 rupees per small case, and plus the brokerage rate is just 50 paisa one time when you buy this particular small case. So Sanjay is asking about Dabur. So Dabur is a good company. However, right now we feel that the valuations are a bit high. For that reason, we have not included this in this particular small case. Deepak is asking that is IIFL aggressive portfolio better or COVID-19 small case better? Deepak, it is your choice. If you are an investor who are looking for higher returns, then obviously look for IIFL aggressive portfolio. However, if you are looking at more stable kind of a return, then I think so COVID-19 small case would be better for you. Manish Singh is asking question, is there any mutual fund which invests completely in debt-free small cap, mid-cap companies? Well, they are not companies which have zero completely debt-free company, but I could remember like, SBI small cap mutual fund, it has a lot of companies which have very little debt. So there are some of the companies, if any of the mutual fund companies have invested in BFSI sector, obviously those companies would be having some debt. So if you want to do an SIP, you can go to our website, smallcase.indiainfoline.com, and we have put some videos also on our YouTube channel where you can find how you can do a SIP in case of a small case. It is very easy to do. Next question, Judith has asked about, is it good to invest in agro-based industries? Obviously, agro is a sector which should do pretty well right now. In fact, the fertilizer demand has really gone up in last couple of weeks. There's not much of impact of COVID of that. And for that particular reason, we are recommending Kaveri seed also in this particular small case. Let me just see which are the other questions that are still open. Give me one moment. So someone has asked, Hima has asked about Balaji, MI, Cycle, and Himadri. All these are very decent, good agrochemical companies. Obviously, Himadri is not an agrochemical company, but I think so. All these three companies should do pretty well in this current juncture that we have. I think so. With that, we are more or less done. Someone has asked about a question about Westcott. I think so. We have already answered that particular question. Banking sector, more downfall. Specific banks like HDFC Kotak that we talked about will do pretty well. PSU banks, a big no-no. Doesn't think right now is the right time to look at it. There's a lot of pain in the system. So right now we should not be recommending those particular stocks. What would be the growth expectation from this small case? Well, if you look at it, I think so. The small case has already in the past given a 17% kind of a CAGR. So I think so. Looking at from where we are launching this particular small case, I think so. A very strong double-digit return in the small case is quite likely. We cannot guarantee any return, as you all know, and legally also we cannot do that. However, what we can clearly see is that these companies are leaders in their own right. These companies don't have enough leverage. So, in case we see more depressed market going forward, this particular small case is likely to do well going forward. Someone has asked about Just Dial, Cadila, Biocan, and Z, out of which the pharmaceutical ones like Cadila is something that we really like, along with Biocon as well. So, Navyas, if you're a beginner, then obviously you can look at this particular small case. It is a very good small case to look at. In terms of time horizon, someone has asked, it is clearly for a period of more than 1 year that you can look at investing in this. At what Nifty level you can buy this small portfolio? Sumit, we have made this portfolio looking at the current Nifty level. Someone is asking about Savita. Oil, we would not like to answer those questions actually right now. Intraday is not advisable according to us because you make a lot of losses. So better is to be long-term oriented investor. If you want to do intraday, please do it with a very strict stop loss. So I think so. The difference between a PMS and a small case is that the flexibility is there in for you to yourself decide when to buy and sell. Whereas in case of a PMS, it is the fund manager which comes and decide. So for that reason, I think so. Devendra, there is a different market or different approach to a small case relative to a PMS. From a cost perspective, also, and from a ticket size perspective, also, a small case is better for an investor relative to a PMS. PMS is more of an HNI kind of oriented product. For PMS, you need a minimum of 50 lakhs, whereas right now for this small case, you just need 37,500 rupees. Dhaval is asking EMI better or invest right now. I think so. It is depending on what's your risk profile, Dhaval. If your job is quite stable, then you can go for investing right now. Otherwise, please pay your EMI first. ETFs are a good option to invest in. However, sometimes they are forced to invest in a particular company, even if they don't like it. Like we saw a lot of people being forced to keep Yes Bank because it was part of the index. So Vipul has asked a good question. Why have you not put demat and ITC? Vipul, demat we have not put in this particular portfolio because right now the pricing of the stock had gone up a lot, and we thought at that particular point of time that there are some other stocks also which look good. I agree with you. Demat is a good company, so obviously if you own that, I don't see there's any problem with that. What is the minimum amount to be invested? Just 37,500 rupees is what you need to be looking at investing in this particular small case. Why no NBFC stock like HDFC or Bajaj? Because the Bajaj fund is going through a bad time right now. Collections are pretty poor, and for that reason, in a COVID-resistant small case, Bajaj is not there. If you make a portfolio which is for an aggressive investor, there a Bajaj would be there. So you can go through the aggressive portfolio if you want to invest in that kind of a small case. Someone has asked about Tata Power at this price. We don't like Tata Power at this particular point of time. We think PGCIL because it's from a PSU. That looks a better kind of a story for us to look at. TVS Chakra is a wonderful company, should do pretty well now with two-wheeler demand going up. So we really like, I think the price has already corrected from 4,500 level to around 1,000 level. So that looks a pretty good stock, Mukesh, to buy. What could be the see dividend right now is very difficult to tell for most of these small cases or any of the stocks because people are going to change their mindset uh, about investing. In fact, if you look at the performance of this particular small case, had you invested in 3 months period, Nifty you would have lost close to around 23 rupees, whereas in this particular small case would have been down 12 rupees. So obviously this particular small case has been outperforming the market. So I think so. A lot of people are asking question that why have you not put X or Y in this? See, we have tried to have representation from different sectors. Some of the stocks, like for example, Reliance that you have asked about, they are part of some of our other moderate and conservative IIFL small cases. So obviously, we can't put all stocks in every portfolio that we have because every portfolio has a different kind of a theme. And for that reason, this particular small case has a different theme relative to a theme of a moderate or a conservative portfolio. Uh, I think so. We are more or less done with most of the questions which have come. And with that, I would like to close this. Thanks a lot for your time today. Please give a feedback about this particular session. If you want more sessions on some of the other small cases that we have or something else, you can always write to us at research@iifl.com, and we'll be happy to reach out to you and get back to you about some interesting stocks that we like. Meanwhile, you can just go to smallcase.indiainfoline.com and try and buy this particular small case. And I'm sure over next 1 year, you'll be very happy with the result that you will get. Thanks a lot.